All right, so we've been getting a lot of calls about what is lock limit down. And let me try to explain the best I can looking at this chart. This is an E-mini S&P 5-minute March 2020 chart. And there's a couple of different levels to what's called circuit breakers. In other words, when trading halts or when a market can't go either down any further or up any higher. And in the overnight session for the E-mini S&P, the circuit breaker is at 5% price limit. So if the market goes up or down 5% from the previous day's close, then it can't go any further. In this particular case, last night, we hit our 5% limit overnight, which means trading is halted until 8:30 the next morning, or in other words, when the New York markets open up. Okay, the New York Stock Exchange opens up. So this morning at approximately 7 a.m. in the morning, we hit that lock limit level, 2601 in the E-mini S&P. And the market can't go any lower than that. So in other words, there's nobody able to do a transaction below 2801. If you wanted to buy a contract here, you could, right? Will be happy to sell you one. But because the expectation is once that lock is lifted, the market is going to continue going downward. In other words, the sellers have control of this market. So you could see some spikes up. People were trying to get out of positions or trying to buy, establish long positions at 2601. But mostly it was sellers. It was a lot of contracts on the offer waiting for this market to reopen. And at 8:30, we did reopen, but with a huge gap down. We had a big gap down right here, as you can see, from where this dotted line ends and the top of the candle begins. And then the market continued down and hit the second circuit breaker, or the second loss limit level, which is 7%. So an additional 2% from the night before. And again, we couldn't go any lower than this. We could only have buyers. Sellers were not able to push the market down below because it was locked, lock limit. That's a 15-minute lock. And after that, then the market opened up again and we experienced another gap down. And the market continued to trade down and up, and then we went back to the regular day. There is a third and fourth lock limit. The third one is at 13%, which in this case would have corresponded to 2382. We're well above that right now, so we're not likely to hit that today. And then the last one is a 20% loss limit at 2990, and if we hit that, trading's over for the day. So that's how it works. We have an overnight limit at 5%. Then we have a 15-minute lock limit at 7%. Then we have another 15-minute lock limit at 13%. And then we have a final lock limit at 20%. So when you see that on the market, when you see these kind of chart formations on the market and we're way down, this does not mean that there is a lot of support here and you should try to buy. That means we're locked and sellers are in control, and most likely we're going to gap down once the lock is released. Hope that helps.